Welcome back, everyone. Sean Stevens here again with Metroplex Mortgage Services, bringing you another divorce mortgage planning video quick tip. What is an equity buyout and how does it help your divorce refinance? We recently discussed basics surrounding divorce refinance options, reviewed rate and term versus cash out refinances, and how a maximum loan to value can affect the available funds used towards the settlement process. In today's short video, I will explain what an equity buyout is, how it can help maximize the available equity for a divorcing homeowner, and outline the steps you need to take to navigate the process successfully. Now, before we get started, don't forget to take advantage and download our Divorce Lending Blueprint for Success with the link below. This free guide is designed to help walk you through the divorce lending process step by step and is a great educational resource for both homeowners and attorneys alike. While the term equity buyout might sound like one spouse is purchasing the other's interest outright, it's actually a refinance that allows the divorcing homeowner to access equity in order to pay out the departing spouse's share. When properly structured, it can help preserve the family home and provide a flexible mortgage solution for converting equity into settlement funds. Remember that equity refers to the difference between the home's current market value and any outstanding mortgage balance. For example, if you have an appraised value of $600,000 with a mortgage balance of $400,000, your equity is $200,000. If the settlement calls for a distribution of the home's equity, a refinance is a common tool used to generate the funds needed to buy out the departing spouse's share. The equity calculation is critical because it dictates available loan programs. As previously discussed, divorce refinance options generally fall under one of two categories: rate and term or cash out refinance. Cash out refinances are typically capped at 80% loan to value and come with higher interest rate adjustments, with one exception being that VA loans do allow for cash out all the way up to 100% loan to value. On the other hand, rate and term refinances may allow loan to values of 95% or higher, depending on the loan program, but do not permit equity to be withdrawn. Thankfully, an equity buyout refinance offers the best of both worlds. If structured properly through the marital settlement agreement, an equity buyout can qualify under rate and term refinance guidelines, which allow up to 95% loan to value or higher, lower interest rates than a cash out, and the ability to convert equity into cash for additional funds to be used towards settlement. This is important to attorneys because it means your client may be able to access equity to buy out the departing spouse, just like a cash out loan would offer, but still benefit from the more favorable terms of a rate and term refinance. When drafted strategically, your agreement can allow for better loan terms and more equity without triggering the terms of a cash out. It is important for attorneys to consider this early because the success of an equity buyout refinance depends on how the agreement is written and when the mortgage strategy is implemented. Common problems include incorrect assumptions about refinance type, LTV caps not matching the proposed equity transfer, and language in the MSA that doesn't meet lending guidelines. And above all, work with a team that understands both mortgages and divorce. Our divorce lending practice group specializes in aligning mortgage financing with divorce settlements, helping attorneys and their clients avoid common financing pitfalls, maximize available equity, navigate unique loan to value and eligibility requirements, ensure settlement compliance, and preserve home ownership options. Whether you're structuring a buyout, planning for equity division, or addressing tight timelines, we can help provide clarity and guidance at every stage of the process. If you need a case consultation or have a question, just call, text, or email because our team is ready to assist. And most of all, I want to thank our family law partners for the continued referrals and the trust you place in our divorce lending practice group. We're proud to support your clients through the complex real property issues that arise during divorce. As a scheduling note, we are currently coordinating in-office and virtual presentations for family law firms. If you'd like to take advantage of this personalized training, we'd be happy to tailor a session for your team, covering key topics such as equity buyouts, refinance timing, and how to avoid mortgage-related pitfalls when drafting marital settlement agreements. Just contact my office today for flexible options so we can reserve your preferred date. Thank you again for forwarding and sharing today's post with any attorneys, clients, family, or friends who may be in need of our divorce mortgage expertise.